Hi guys, my name is Untitled. I'm with fxKnight. First question I want to ask for you guys, if I stand away from the microphone, can you still hear me okay? No? Not at all? How about now if I talk really loud like this? Is this okay or you still prefer the mic? Just the front row, okay. Alright, I'll run back and forth then. So, we're going to... See, I like to move. That's the problem. We're going to take an overview at some of the strategies used by the banks and the big corporate traders. Because face it, they've got the tallest buildings in most cities, they know what they're doing. So we want to try to do more of what they do and less of sort of the beginner mistakes that oftentimes get us into trouble. And we're going to take a look at some of the strategies that they use today, and hopefully you can incorporate them into your own trading. Some of the things we're going to cover: the 3 favorite tools of institutional traders. 3 technical tools that you should be able to plot on your own charting platform and follow in your own trading. The 3 most common causes of losses. This is a big one because I've spent a lot of time training traders, and when people have losses, especially repetitive ones, you start to see the same patterns kind of over and over. So I'm going to do my best to point them out to you, and if you catch yourself doing it, don't do it anymore. And then 3 things you can do for immediate results to see some improvement in your trading. I like it when people leave a seminar with things they can apply right away and see a result. Alright, technical tools that the banks like to use. Pivot points and medians. This is a biggie. I've been in a lot of trading institutions and you almost always see this on their charts. So if they're watching it, chances are they're going to make their trading decisions based on things they see on these indicators. So if they're watching them, you should watch them too, and you'll be a step ahead because you know if you're coming up on a support or resistance level that you know they're watching, chances are they're either going to enter a trade or exit a trade when you get to that point, when they get to that point. And if they do it because of the amount of money they're trading with, it'll probably move the markets. So you want to be on the right side of their trades. Fibonacci retracements and extensions. That's another one. And then the 21 exponential moving average combined with its envelopes. Envelopes are just parallel lines that move in parallel with the 21 exponential moving average. I'll show you all of these in real trading examples in just a moment. First of all, pivot points. What is a pivot point? Quite simply, it's the high plus the close plus the low divided by 3. Or in other words, the average of the 3. The high, the low, and the close. We plot that on our chart, and then we, for support 1, which is the level right below the central pivot point, we take 2 multiplied by the pivot and subtract the high. Resistance above our pivot point is 2 multiplied by the pivot, subtract the low. Now don't worry, you don't have to memorize these. You can Google pivot points and you can get most of these formulas online. More important is what happens when price hits them, and I'll show you that in a moment. Above and below each of those levels, we've got support 2 and resistance 2. And you see the formulas there. We take R1 minus S1, subtract that from the pivot point for our support, and then add it to our pivot point for our resistance. We've got 2 more levels above and below those as well. And then in between, we've got the medians. The median is simply you take any 2 pivot points, add them up, divide by 2. That's your median in between. A lot of complicated math. Let's look at the upshot. Okay? This is a chart of the pound against the dollar, 1-hour chart from earlier this week. Let me throw on the pivot points. You can actually see here, this is, the purple line is the central pivot point, R1, S2, and so forth. And this is the medians, the dotted lines between them. Those are the medians. So take a look at what price is doing here. Actually, there, I can point this way. You see how price is coming down here? First of all, look at the support being provided by the median here. Then when price comes down, look at where the drop ended. Right here. Why there? Because banks are watching pivot points and medians. If they set their orders there to close their positions, or in other words, buy back what they shorted, as the price is dropping, it's going to hit that level and it's going to stop dead. If you know where that level is, you can set your target a little bit above it and get out just before they close their positions. It's pretty straightforward. Once you plot them on your charts, wherever you see a line, it's potential support and resistance. And that's where you want to be thinking about either getting into a trade or getting out of a trade. Alright, clear those off. Let's look at fibs real quick. Now, normally when you mention Fibonacci, you see a lot of people in the audience always go, uh-oh, fibs. It's really complicated. It's really not, okay? Fibonacci is harder to pronounce than it is to do. If you can count to 4, I promise I can teach you to use fibs, okay? I always say in my trading room, A, B, C, D. It's as easy as A, B, C, D. If you can count to 4, you can use fibs. Let me show you. Point A is where the prior downtrend started. Let me actually say, like, let's say you're sitting right over here. Where my pointer is. You saw a big move down, you saw a little bit of a correction to the upside, and your indicators and your intuition is telling you that there will probably be another move down. So what you want to pinpoint is a good place to enter and a good place to exit if you're going to take the second move down. If you want to study what's likely to happen on that move down, you look at the down move immediately prior, or in other words, to the left. Okay? If you're where my pointer is and you're thinking you want to take a short here, then obviously you're expecting a down move. So look to the down move immediately prior, and we measure that. Point A is where the down move before began. Point B is where it came to an end. We connect those two, and that draws our fibs. And you can see from 0, where my pointer is, the numbers count up. This is the Fibonacci retracement, or in other words, what percent of the down move was the correctional move. Okay? In this case, you can see we had a lot of price congestion right by the 38.2 fib. A little bit went beyond to the 50, but most of it's right here by the 38.2. What does that tell us? That tells us the retracement retraced 38% of the initial A to B move. We call that point C. See, we're already 3/4 of the way through. Not so tough. You measure the move before, and then you measure the counter move. Based on where C is, you get some idea of where D is going to be, or in other words, the final target. But before you enter, I want to point out, C helps you find where D is, where your target is. C is not necessarily your entry point. Okay? You do need a couple other confirmations. In my own trading, I use a couple indicators together with fibs. So don't enter just because you found the C. You might catch yourself getting whiplashed around a little bit. Okay? So you want to enter a little bit after C. In this case, I picked where the circle is because something very interesting happened at that point. That's the point where we broke below the 38.2. Okay, it's been acting as support, as you can see, the past several candles. Looks like about 35-40 minutes it's been acting as support. Price hasn't been able to break that support. Suddenly, the price breaks below it. That's already significant, but don't jump just when you see a break. This goes for fibs, this goes for ranges, anything else. Don't jump when you see the break. 80% of breakouts are false breakouts. They're going to retrace and go right back up on you. Okay? Wait for the retest. That second candle in the circle is almost more significant than the first one. Because that 38.2, which acted as support, now just got tested as resistance. Okay? And that's what you want to look for. If that second candle went back up above, something's wrong. Okay? So don't go on the first break, wait for the retest. And you notice that wick, it comes pretty close, but it doesn't exactly touch it. Okay? Retest doesn't have to actually touch that line. It just moves towards it and then falls short. When you see that, then you're good to go, and you trade to D, which is your target. In this case, we entered at 38.2, so we're going to exit at 138.2.